Good day, fellow champions of inclusion. I am A. Ron, and this is the Inclusive Dad Podcast, where we explore inclusion and make it practical. Thank you for taking time out of your busy schedule to join me in exploring ways we can create a more inclusive world together. You are important, you matter, and you can make a difference. Today, my guest is Michael Ringel. Welcome to the show.
Good afternoon. Good morning, A-Rod. Thanks for inviting me.
Absolutely.
Yeah.
Why don't you start us off and just tell me a little bit about yourself?
Sure. I'm actually a New Yorker who happens to live in New Jersey. I don't know if you can tell by my accent. And we've got two beautiful daughters, six dogs, plenty of foster dogs. And over the last 20 years, my mission is to empower families with children with special needs to protect, grow, and more importantly, enjoy their wealth. So thanks for having me.
Absolutely. How did you get started helping families with children with special needs?
Yeah, so about 20 years ago, when I got into the financial planning and advising business, I was working with a couple relatives who have children somewhere on the autism spectrum. And some of them actually were pioneers, I would say 30, 40 years ago. We have a relative who needs lifetime care, and they were looking at housing issues, and they realized that there were a lot of challenges in finding a place for cousin Jeffrey. And they decided, with a few other families, to purchase a home. And through the government benefits that Jeffrey's entitled to, they wound up purchasing a home, having somebody take care of Jeffrey and his friends, because Jeffrey he has um, he needs permanent care,
Right.
and he lives a great life now. And it was just inspiring in what they did and how they did it. And I realized that there were other families out there who are so overwhelmed, right, with what goes on in their day-to-day lives when, they've got a child with special needs and neurotypical children, that they know that they must plan for two lifetimes, and they don't really make it important. Well, it's important, but they just don't make it urgent because there's so many things going on in their lives that
Right.
I felt that I could teach them a couple things and help them. So that's why for the last 20 years, my partners and I have dedicated the work that we do to helping families.
Yeah, I love that. So my
Yeah.
my story is I have two children. My daughter Cecilia, she just turned 22. Yeah, 22 last October. So
Awesome.
she has cerebral palsy and epilepsy, uses a wheelchair, and needs 24/7 care. So that's why I was
Right.
really interested in having you on to hear more of your perspective. I mean, because
Yeah.
the traditional path is kind of live with parents as long as they can, and then go into like a group home setting. So
Right.
um, and I mean, I understand what you kind of explained there and how they purchased a house and kind of set it up themselves. But I mean, I haven't
Yeah.
come across a lot of like resources digging for that. So I mean, is this kind of like how common is that situation where families come together like that and kind of create? I don't know if you would call it like their own group home or control it
Yeah.
kind of like that.
Yeah. It's not very common
Okay.
because most people just, you're exactly right. Most people, their child's going to live with them until they're not here.
Right.
And you need to start planning for two lifetimes. So, what does that look like? Right.
Right.
Number one is you looking to protect, right? Making sure that your child gets all the government benefits that they're entitled to.
Right.
That could be SSI, could be Medicaid, could be housing waivers, whatever it might be. The first thing you want to do is really understand and realize that you need to plan for their lifetime as well,
Right.
financially. So what does that look like? Typically, when children are with the parents are funding their lifestyle and paying the bills, but you need to think about when you're not here. So what
Right.
we do is we educate families on you know the estate planning choices that they have. Number one, if they don't do anything at all, their default future will be to leave money to their child outright,
Yeah.
and that would disqualify them from receiving government benefits, because if there's more than $2,000 in their child's name, they
Yeah.
would have to spend down all of that money until they become destitute, and then they would get SSI, and then they would get Medicaid, and then they might get those benefits. So that
Right.
is not a great strategy. right?
Not
So,
unless you want like really fancy furniture and really big
yeah.
TVs and stuff, I guess.
Yeah, and if you leave a tremendous amount of money,
Right.
that may be a good strategy, but then all that money must be used for their benefit
Mhm.
until the government kicks in their portion. The
Right.
second strategy is people think about sometimes, and it's not advised, is they disinherit their child. They say, we have all this money, we have this estate, we have this life insurance. We're going to leave it to somebody else with the hope that they're going to spend it on my child.
Hmm.
And we all know that hope is not a strategy.
Right.
Think about it. If money came into somebody else's financial world, it's not protected. You hope they're going to spend it on your daughter, but they may or may not.
Right.
It could be subject to creditors. It could be subject to divorce. It could be
Hmm.
subject to misuse. And so, therefore, that's not a great plan either.
Right.
And where all roads typically lead is to the establishment and creation of what is called a special needs trust.
Right.
And there are two types of special needs trust. The one we're talking about is a third party special needs trust, which is typically set up by the parents for the benefit of their child. So any money that eventually goes into that special needs trust will be deemed protected so that your child gets government benefits. And there's a whole boatload of money, hopefully, sitting in this trust to supplement their care.
Right.
And that's what we typically teach families, that that is the way that we see planning should be done. We coach and educate them on how to do that, introduce them to attorneys who specialize in creating special needs trusts. And then what we do as financial advisors, special needs planners, is we help families figure out the most efficient and effective way to eventually fund those trusts.
Sure.
And we do it in such a way where we teach families how they can have a great life in retirement, have an abundance of money for themselves, and be able to have enough money to fund the special needs trust to take care of their child in the future.
So the special needs trust, is that something, let's say I don't have any money to put in there for my daughter at this time? Is that something you
Yeah.
can set up and then like if I die, my life insurance would could be put in there or a portion of it?
That's exactly how we would
Okay.
recommend it.
Okay.
Because if you start funding a trust today, number one, the money, when it grows, the trust is going to need to file a tax return.
Okay.
And typically the tax return that you're going to file is just more administrative work for you to do.
Right.
The money in there would then have to be only used for their benefit. So why would you put money in there now and restrict it?
Sure.
Right? So yeah, so what we would do is we would recommend you create the trust. It has its own EIN number, which is basically the social security number of the
Yep.
trust in the eyes of the IRS.
Right.
You purchase life insurance, and there are different types of life insurance. There's term insurance, which you pay an insurance company a specific amount of years, and then the insurance is over.
Yep.
But typically, what we like to see and we help people do is put permanent life insurance in place, because that life insurance has to show up someday, right? So when you, the parent, are 50, 60, 70, 80 years old, that life insurance, part or all of it, could be the beneficiary. Well, the beneficiary could be the special needs trust.
Sure.
And so, what we're specialists in doing is helping and coaching and teaching families how to create the plan, how to establish the trust through a proper attorney, and then how to find the money in their financial world to help fund permanent life insurance.
Right.
Yeah,
Yeah.
that's how we do it.
That's interesting. Like how
Yeah.
much, I mean, is there like a range of how much it costs to like set up a trust? Like, or
Yeah.
how
So
expensive is that?
typically attorneys charge anywhere between $2,000 to $4,000,
Okay.
depending on what needs to be done. So some attorneys have a set price that includes wills, power of attorney,
Oh,
healthcare
okay.
proxy, and the trust. But if you have some of that already created, right, the attorney may just create the trust. Some attorneys will create the trust in just language in your wills. that says upon your passing, this trust is created.
Oh, okay.
Right? I personally like to see a standalone special needs trust because this way, if you have other family members who want to gift money to your child,
Right.
they could name in their wills,
Right.
right? Instead of naming your daughter outright, they would name the special needs trust for your daughter as the beneficiary in their estate planning.
Right.
And that might fund the trust, right, sooner rather than just on your lifetime.
Yeah. Plus, that
Yeah.
also makes sense because if it's in my will and it's created upon my death, if they pass first, then where does the money go if the trust isn't actually set up yet?
Right, exactly. And
Right.
and
Yeah.
what happens is if money does go into your daughter's name, right, it goes into her social
Yep.
security number. There are three possibilities. Number one, you'd have to spend it down until you get to $2,000 to get them back on government benefits.
Yep.
You could transfer it into an ABLE account. We'll talk about that in a second. Or a first party special needs trust could be created. Now, the difference between a first party special needs trust and a third party, which is set up by the parents, is this: money goes through your daughter's social security number, right? Could be
Hmm.
transferred to that first party special needs trust. If it goes in there, that protects them, right, from receiving government benefits, and that's great. The
Yep.
only downside is that the primary beneficiary of a first party special needs trust is typically the state you live in.
Okay.
The state wants to be paid back, also possibly known as, or could be known as, a payback trust.
Yep.
The state has the first right to get reimbursed for Medicaid benefits they paid your child for your child.
Right.
So therefore, there may be nothing left for
Right.
your other beneficiaries.
Right.
So you're right. That's why we like to see it. But if somebody already has it created through language in their trusts, it's better than not having one at all.
True. Yeah.
Yeah.
Yeah, that makes sense. I mean, my daughter's been on, Medicaid since for many years. So I'm sure. I mean, there's way more. If she got 100,000, let's say, from life insurance, that would be gone quickly in that scenario if they're taking it back. So
Right. Right. So
yeah.
they would only take it back when she passes.
Oh, okay. Okay.
Right.
Oh,
So
I got you. I got you.
yeah. So it, let's say $100,000 goes
Yep.
into her name because somebody left it to her. What I would recommend you do is create this first party special needs trust. You transfer the 100,000 into that first party special needs trust.
Hmm.
Now she has no money in her name.
Right.
Uh, if that $100,000 is not used in her lifetime, whatever's remaining, the state will go after.
Right. Okay. I got you.
Right. And then there's nothing left for your other
Right.
child.
I got you.
In a third party trust set up by you, upon the passing of your daughter with special needs, the beneficiaries could be anybody you want. It does not need to be the state of New
Oh,
Jersey,
okay.
state of
I got
wherever
you.
you are. Right.
That
Yeah.
makes sense.
Yeah.
Thanks for the clarification.
Oh, my pleasure. And what I noticed in a lot of the webinars that we host is there are really three things people are concerned about. Number one is,
Yep.
what is a special needs trust and do I need one or not? They want to know what an ABLE account is.
Yep.
We could talk about that in a minute. And the parents just want to know that they're going to be okay and their child's going to be okay
Right.
from a financial point of view.
Yeah. That
Yeah.
makes sense.
Yeah.
Yeah. Do you want to go into a little bit about like what an able account is and how that works?
Yeah. So an ABLE account was actually created during the Obama administration, and it is under Internal Revenue Code 529. Very similar to how a 529 plan works when parents save for college.
Okay.
Money goes in after tax, it grows tax free, and it could be spent for your child's care. It will be spent tax free, and any money left over, the beneficiary, again, just like a first party special needs trust, will be the state because they want to get their money back from what they paid your daughter for Medicaid.
Right.
So it does protect wealth. Parents could put in up to the a state credit limit. Right now, it's $19,000 a year, and it could have a maximum of $100,000. So anything above $100,000, right, would count towards your daughter's assets. May or may not disqualify her. So you need to make sure that it doesn't have more than $100,000 in it.
Sure.
It can be used.
Go ahead.
Sorry.
Go ahead.
So I run across a lot of times parents have saved money for college for their child, only to realize that they may not go to college.
Right.
And if they take the money out, there are tax implications. So a couple things you can do. If you have a 529 for college for your child and you determine they're not going to go to college, the first thing you could do is you can actually change the beneficiary to your other child. Right? So that's number one. Number two is you can transfer on a tax-free basis money from a 529 plan to an ABLE account.
Okay.
And doing so would take the money out of your child's name, but it would also then have the same restrictions and it would have the benefits of the ABLE account, but at the same time, if your child passes away, the state you live in could go after the money for Medicaid.
Okay.
And so a lot of families that we work with, they hear about ABLE accounts, they want to fund it, but then they go, well, I don't want the state getting the money. So typically
Right.
what happens is we look for workarounds, right? So for example, a lot of times, children get gifts for their birthday, for the holidays, and parents typically put the money in their child's name. Well, what
Right.
I would suggest they do is they open up a bank account or an investment account under the parent's name, but they know it's for their daughter or their son.
Right.
And this way you just communicate with your family. Say, you know what, during the holidays, if you're going to give money, if you're going to give them gifts on their birthday, just make the check out to me and I'll deposit in an account for their benefit.
Right.
So
Yeah,
it,
that
it
makes
does
sense.
take planning. Yeah.
So what are there limitations on what the money in an ABLE account can be used for? Or what?
In an able account, not really, as long as
Okay.
it's for the benefit of your child.
Okay.
In a special needs trust, the limitation where it could have some negative consequences is if you spend it on food and shelter, right?
Okay.
If you're getting SSI and you spend money from the special needs trust on food and shelter, it could decrease the amount of SSI that you get. So you
Okay.
just need to be careful. Special need in an Enable account, you could spend it on almost anything for their benefit. Special needs trust, you just have to be a little bit more careful than the Able account.
Okay.
Yeah.
So my bachelor's actually is in accounting. So
Ah,
I haven't done that for quite a while, but my first job was I worked for I mean, now it's a multi-billion-dollar corporation, and I worked in the tax portion of it.
okay.
So I was involved in, like, I'd go to meetings with, the big accounting firms and talk about strategies, set up multiple different, entities to run transactions certain ways to minimize like the tax consequences.
Yeah.
So my brain has kind of always gone to this type of stuff. I mean, corporations do that to pay less taxes. I mean, you've kind of talked about a few strategies, but are there like specific strategies in this world too to run, like, to set up a transaction or a certain way to like minimize it? I think you've kind of talked about maybe a few, but is there other ways people can kind of push it a little bit to reduce like the impact on their loved one?
You mean like for tax strategies or?
Well, I mean, I guess kind of where my brain goes is like, I
Yeah.
know, like, if you're on Social Security, I mean, you can only make so much money before you start, like, your benefit goes down, or you can only have so many assets. So is there ways where like somebody with a disability could have a business, make some money, and then maybe put the money into like an able account? I mean, and I don't know the answer. I'm just, is there ways to kind of go up against the edges of the laws like corporations do to, like, you know, stretch it a little bit farther than we're used to stretching it?
It's a great question. Nobody's asked me that before.
Okay.
Um, yeah, not really. I mean, it comes down to how much, comes down to the amount of assets your child has in their name,
Yep. Yep.
right? When they become, after age 18, right? So when they're younger, the parents' income is deemed part of their income, right? So they may not
Yep.
qualify for
Yep.
SSI beforehand.
Right.
From an income point of view, every state is different,
Sure.
right? For example, we live in New Jersey and they have a program called Workability where your child can earn up to a certain amount of money and they'll still qualify for benefits,
Okay.
right? Um, One of the things parents need to be careful of, especially is if they get divorced, right? Child support, alimony goes to the ex-spouse, but child support goes to the child. And so
Oh.
any money that's going to the child would be deemed as income and could disqualify them from benefits. Again, every
Oh
state's
man.
different. You
Right.
need to check with an attorney in your state. But one of the things that we do here for our clients is make sure that, child support gets paid directly to a first party special needs trust,
Oh. Okay.
or or it gets paid to an able account. Again, depends on the income limits, earned income, unearned income of your
Right.
state.
Right.
Um, but yeah, corporations act a lot differently than, trusts or individuals.
Right.
So, it can get overwhelming. We kind of try to keep it pretty simple.
Yeah. Just that's kind of where my brain went. I'm like, I mean, corporations push this stuff all the time. I mean, have like multiple entities set up to flow the money through to, like, you know what I mean? And it's just like,
Yeah.
I feel like there's probably ways, maybe, I guess maybe the laws are set up where they can kind of do that stuff and we can't, I guess. But my brain's like, is there a way to like do something we can push it? I mean, they do it all the time. So is there ways to push it a little bit? But maybe
You
there's
know,
not.
it depends how complex you want to get.
Yeah.
Corporations are corporations,
Yeah.
they act differently than individuals.
Yeah.
So
For
I
sure.
just found that, most of the families that I speak to are just so overwhelmed with
Yeah.
what's going on in their day-to-day lives, from therapy to, like you said, housing and
Yep.
school and doctors, and that they know this is important. They just
Yep.
want guidance and they want somebody to help them and they want it to be easy and not
Right.
complex.
For sure.
Because the last thing you want to have happen is, once you get the benefits, as you know, they're so hard to get.
Yes.
You don't want to get kicked off. And we have
For
a
sure.
cousin of ours who got kicked off for a little bit, and it took months to get back on.
Right. Oh, for
And
sure.
there's so many other things that they should be focusing on.
Yeah.
Yeah.
So are there specific, I mean, for like the able account, is there only certain monies can be put in there, or like, I mean, you said, because you've said something about, I mean, like what type of money can you put in there? Just gifts from people, or
You could,
you said
yeah,
child
you could,
support too. So,
yeah, you could put almost anything in there.
okay.
Every state has their own able account program, so you can go look up in your state what accounts are available, and then they give you investment choices on where you can put the money.
Okay.
Um, a trust is different. A trust can own almost anything. So,
Okay.
a trust can own real estate. A trust can take out a mortgage. A trust can own investments. There are so many different things a trust can own. So, things to consider is how much money should flow into a special needs trust eventually.
Sure.
Maybe somebody purchases a piece of property with money in the trust, right? So reasons you might want to look at doing it beforehand is, yeah, you're right. Um, owning a home for your child as opposed to going into a state group home.
Sure. Yeah.
Different possibilities. And you want to be able to fund it with as much money as possible someday. Like, for example, I'm working with a family right now. They have a special needs already created for their 35-year-old son. They know he's going to need, lifetime care, and we did some financial planning for them for their retirement. They're going to be okay, and they're going to be purchasing um, a second to die life insurance policy, because upon the second death, a boatload of money is going to fund that trust for their son.
Okay.
Their neurotypical son is going to get the house. So it's going
Okay.
to be easy. The life insurance goes into the trust tax free. The
Yep.
house is going to go to the other son He'll do with it what he wants, sell it, keep it, it's up to him. And then they're going to
Right.
split the other assets 50-50. Typical son gets it outright, special needs trust for the other son.
Gotcha.
Yeah,
So like a special needs trust could it like own a business and stuff too? Like if you
sure.
okay.
Yeah,
Interesting.
it can own anything. It's very similar to a corporation,
Okay.
right? You file
Interesting.
tax returns. There could be a business in it. Um, it could be you can own a home. It could take out a mortgage. You know, and
Interesting.
it's all based on what the trustee wants to do. And
Right.
the trustee is the person who you're entrusting with the assets in the trust.
Gotcha.
And that should
Interesting.
typically be maybe a family member. You could have co-trustees, a successor trustee if your trustee can't do it anymore, doesn't want to do it. um, you can have a trust protector, like somebody to oversee what's going on. You can have a corporation, a bank, become the trustee. Like a lot of families we work with don't have family members who would take on this responsibility.
Okay.
If there's $1 million or $2 million or $500,000 in the trust, you want to make sure that somebody doesn't, squander the money.
Right.
So
Yeah.
some people say we're just going to use a professional trustee to do that. So a lot of different choices, but something is better than nothing.
Yeah. For sure.
And so what I implore people to do is, the best time to plant an oak tree, right, is 20 years ago.
Yep.
The second best time is today.
Right.
Take action, do something. This is great information, but great information without action, right, just leaves you in the same position that you're in right now.
Absolutely.
Yeah.
You've mentioned it at least once where you talk about planning for two lifetimes. Can you explain a little bit exactly like what you mean about the two lifetime piece?
Yeah. Yeah. So planning for two lifetime really means that, the parents are planning for their lifetime while they're here on earth,
Right.
right? Typically, the families that we work with, the parents are going to provide, supplemental care for their child, whether the child lives with them or they live somewhere else, right? Typically, the parents are going to fund that. But upon the parents passing, there needs to be money somewhere to plan for and pay for their child's lifetime.
Right. Yep.
So planning for two lifetimes, a typical family, they have the choice. They could plan for their lifetime and their typical child's lifetime.
Right.
Families with children with special needs have to plan
Yeah.
for not only their lifetime and making sure that there's enough money to fund the special needs trust someday
Right.
for their child's lifetime. So that's what I mean by planning for two lifetimes.
That makes a lot of sense.
Yeah,
One question that I ask all my guests is, what is your definition of inclusion?
that is a great question. How about I give you an example?
Sure.
My daughter she went to school in Syracuse for inclusive special education.
Okay.
And she was playing a basketball tournament. It was the students versus the professors versus a team of neurodiverse kids, right? Special needs kids, and the students were losing in the basketball game. And my daughter says, we're an inclusive education program. We can't just let them win. We have to go out and play just like we would play any other team.
Right.
Right. And the kids were like, no, 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 we have to, not play as hard. And my daughter's like, no, we have to play the same because we want them to feel that we're not just allowing them to win.
Mm-hmm.
And sure enough, the students lost. The special needs team won anyway.
Mm-hmm.
But to me, that was inclusion. Treat people as if you're going to treat anybody, and
Right.
don't just play to placate them because they've got special needs. Go out there, and if you win, let them win. Win. If you're going to lose, lose, but let them feel like they're not getting any special treatment. Just because they've got special needs.
Yeah. I love that.
That to me was a great example, and the
Yeah.
best part about it was that the student team still lost.
Yeah.
You know,
Right.
even though they started playing, you know, aggressively.
Right.
So that was
What
appreciated
is,
by everybody. Yeah.
yeah, for sure. What is one tip you can just help or share with parents today just about the financial planning piece? Just what's one tip to help parents kind of maybe push them to get started?
Do something. Take action. Whether it's the current financial advisor you're using, right? It's interesting. A lot of people I talk to, they're working with somebody already, but that somebody isn't an expert in special needs planning. And a lot of times, the planner they're currently using doesn't even know and doesn't even know that this is an issue or concern.
Sure.
So if you're working with somebody right now, communicate with them and let them know that these are the concerns that you have. And if they're not an expert in this, maybe there's somebody at that firm who is. If not, go seek somebody who specializes in special needs planning.
Right. Yeah.
Parents, feel free, they can call me and we can have a conversation at no cost to talk about what's going on in their lives and their family and how we might be able to help. But do something, take action, talk to an
Right.
attorney about a special needs trust, find a resource. I can share with you, some resources that you could share and people can download.
Sure.
But do something, because if you don't do something today, 5 years is going to go by, 10 years is going to go by, and you're going to say to yourself, I should have done this 10 or 15 years ago.
Right. That's great.
That's do something, take action.
Where can everybody connect with you?
Sure, they can send me an email. It's MRINGEL at strategiesforwealth.com, all spelled out. They can go to my website for some great resources at MikeRingel.com. And my phone number in New York is 212-701-7937. Give me a call. We can have a conversation. There's no cost. And be more than happy to provide some resources and help.
That's awesome.
Yeah.
Ready for the last question?
Yeah. Shoot.
Do you like spam lunch meat? Yes or no?
I ate it in college. And I think we put a lot of buffalo sauce on it. But that's a unique question. No one's ever asked me that before.
Well, I live in Austin, Minnesota, where they make spam and where the spam museum's
Ah,
located. So I've been asking every guest just to see um, if they like it or
there we.
not. It's been kind of interesting.
Yeah.
A lot of
Yeah.
references to Hawaii come up because it's big in Hawaii. So people that have lived there, or visited there, usually bring that up.
Interesting.
So yeah,
Interesting. Well, I like the musical spam a lot. If that
yeah,
helps. Monty Python.
yeah. I've actually seen it in the musical up in the Twin Cities, Minneapolis, St. Paul area. They put it on up there, and I went up there and saw it. It's pretty good. It's fun.
Awesome. Yeah, I saw it on Broadway. It was great. It was
Yeah,
fun.
yeah, it
It
was.
was fun. So
Well, thank you so much for being on today.
my pleasure. Thanks for inviting me. I hope people learned a little bit. And like I said,
Yeah,
just do one thing, take some sort of action,
right.
and you'll be ahead of the game.
To those listening, thank you for allowing me to be part of your journey. It is truly an honor. Please join
Yeah.
the podcast newsletter by clicking on the link in the episode description to keep up with the latest episode. Together, we can make the world more inclusive. Until next time, stay empowered and be a champion for inclusion.